for me, a very positive set of results, a very solid set of results, as you already stated, 393 million. I mean, the results really came from across the board, from all of our business lines. And also, again, we saw that we had some impairment releases for the second quarter in a row. But can I just state, I mean, from my side, it's actually great to be back in Amsterdam. I mean, I was here before. And to join a team like ABN, because I think one of the key contributors to a good set of results actually has been the fact that we've got such a clear sense of direction. And for me, it's actually been quite an easy onboarding because I've been able to step in and really just focus on execution. So, yes, the results are very solid, but what's been particularly pleasing for me is how we've, in fact, been able to deliver on our 2024 plan. And if you dig a little bit deeper, you see that we are something like 80% on the way to completing the wind down of our non-core activities. You know, our cost and remediation measures are well on track. And we're making extremely good progress in terms of putting the foundations in to deliver the personal bank in a digital age to our customers, specifically in our focus markets of Northwest Europe. And then also to really help them to transition to a more sustainable economy. So, you know, from my side, I think we have a very, very good platform to jump into the second half of the year, and especially with a very sort of good economic tailwinds that I'm expecting.
Lars, great that it's been a good transition for you. I want to ask about your view on the lending portfolio, because different strains seem to be appearing in the mortgage portfolio. You described that in the results as growing, while the corporate loan book for the core bank remains stable. What type of lending market are we looking at right now as we try to emerge from this pandemic?
Yeah, I mean, the pleasing thing is to see that, again, for the second quarter in a row, we've seen growth in our mortgage activity, which is obviously one of our key segments. And the stabilization in the core corporate book is also something that we've been looking for some time. I would say that the sort of growth is coming, and the sort of pockets of potential future increase is pretty much coming across the board. And this is helped, of course, by the fact that economically we're all stepping into a more positive zone. And I mean, that's definitely our expectations as well in terms of GDP and unemployment outlook. Things are turning a lot rosier.
Lars, good morning to you. Can I ask you just about the capital levels here? Because 18.3% is very strong against your European peers, and arguably some might say excessive at this point, unless you think that there's a credit crisis round the corner. Is there a risk that you're overcapitalized and you're not actually engaging in sufficient business activity to generate higher profit?
Well, I mean, we really had a very good pass on the EU-wide stress test, so, you know, in a way that underpins having very strong capital levels. We are definitely, you know, coming out of a slowdown COVID period, and therefore we do expect to start seeing more organic growth across our sort of focus areas here in Northwest Europe and in the Netherlands. And we've seen some of that growth, as I was mentioning earlier. So clearly for us, the focus is on getting back to a path of growth, and I would say our pipelines are in fact strengthening and showing that there is growth coming. Look, we are back to paying dividends, and I think that in terms of, you mentioned that we're paying 68 cents and we're paying in October, and, you know, the 2019 dividends, and it's about 693 million of equity that we're returning to the shareholder. We already said last year when we positioned our plan for 2024 that, you know, we would be revisiting at the end of this year what we do in terms of returning more capital to the shareholders, whether it is through share buybacks. And for me, that is something that we will continue to recalibrate and have a look at. But I would, on this one, really like to stick to our original plan, which was come back to the market at the end of the year after we've seen the full year results with a view on what we do further in terms of returning capital.